Everybody, we have got a great practical example right now of the power of the patterns. How the patterns can show you, can provide you directional bias and can even indicate an early trend reversal. So let's have a quick recap here. The euro dollar, I'm talking about the euro dollar. Um, on the weekly chart, we had this a busted pattern, right? And it was very close to break to the low. We had a couple of stop run levels here, very close, right? These slight gray lines. So it would have been really easy to run those. So that's a pocket of liquidity, and this was not taken advantage of. So this means that the bears are really very weak. And this is what we got here. This was a counter trend signal, right? So this crossing this line gave us the S1 pattern failure, and that was a counter trend signal, as you might remember. And I came to the conclusion, okay, we should actually be in a long-term trend change. This is the pattern failure, long-term trend in change for the euro dollar, and we should actually see the euro dollar getting getting weaker and weaker, and price moving higher. So this is for the recap, right? And we can see nice price really nicely develop, follow through. And this was the target area, and as well the big number. So we just saw this spike, right, of the big number. Well, that's not a stop line. That's just a touch. That was basically the minimum a target level, and that this move should achieve, right? Well, it made it in a one leg move, so that's a pretty strong trend. What you can see here as well. Now it's consolidating on a high level after this momentum move. It's consolidating on a high level. It's respecting the 21. So that looks pretty bullish, but I actually have to change my mind. Not for the long term. For the long term, I'm very bullish euro dollar, but for the medium term, I'm actually seeing a more pronounced consolidation that goes beyond the 21. So we might actually, well, let's just draw the line here, just to remember. We might actually drop here to back to support. That's what we might see, and I'm expecting this to happen. First thing is price action. Well, we only saw here this this wick touch of the very important 120 level, right? And a rejection bar, a big wick, red bar, and this bar breaks lower. That's kind of an early indication. Oh, the bulls are shying away. Well, here we are basically sideways. That's fine. And right, so I've marked this level as being very important, right? If this breaks, then we should actually see a second leg of this nature. Well, this didn't happen. We got a rejection, so it's basically a breakout failure. But what's really important now is what happened on the lower time frame. Let's have a look here at the 15-minute chart. Why do I think that we get this pullback on the daily? And you can actually find out about that by looking at the 15-minute chart and looking what is the chart doing, what are the buyers and sellers doing in terms of patterns, because the patterns tell the story, right? So let's have a look here and open the 15-minute chart. So that was the important level. What do we see? Well, this is a pattern that looks familiar, no? This is one that looks familiar. This is another one that looks familiar, right? So these are busted patterns on one lower time frame. And we might just want to have a look at those. Right, so this is a 5-minute chart. So these patterns have developed on the 5-min. And let's just draw them in here so we can see them better. These are S1 patterns short, right? Momentum move down. That was the wick that has touched the 120. And now we see an S1 pattern, another S1 pattern. Let's have a look if this is an S1 pattern too. Well, it's another S1 pattern, but it's a lot of white space. I don't trade this. This is well below average quality, right? But this is another busted pattern. So we get here early in this change in trend of the 5-minute. We get 3 busted patterns short in a row. So that actually tells me, oh, this is the bears are serious, right? They're putting power behind them in this early downtrend. And these patterns just show you the power of the bears. And as you might remember, system 1 works really well in an aging trend or in a very early trend. So this is a very early trend, and as we get these S1 patterns plotted here, well, this might even be an S2 as well. As we get these S1 patterns plotted, well, this gives me a great confirmation that the bears are strong. We might actually see now this dive lower and a bigger pullback on a daily chart. So one thing is the strength of the bears. The other thing is, as you know, these are levels of these are the levels where the trap basically came into action, and these are levels of emotional charge. So these are resistance levels. So if the bulls come back with power and force into the market, they want to drive prices higher. Well, then they have to cross above, re-break these resistance levels. So these are resistance levels. So as long as I don't see the bulls being able to drive prices above this, or the last above the first busted breakout, then I have to assume, and I'm assuming, well, that we're actually going down, that this has just ended this one leg up move, and we are now in a consolidation, in a pullback phase. Well, this is tradable, right? Obviously. Right, so what is this pullback phase? Well, we are still here overall sideways on the 240. So let's have a look. Let's have a thought about, okay, how deep can the pullback go? And let's go from time frame to time frame, right? So on the 240, we're overall sideways. Well, it might easily test the lower range of the sideways price activity, which is the 117, right? By the way, on the 60-minute, currently we're sitting on resistance, the 200. If this breaks, then we get another target. And the target becomes basically the prayer price low. So currently it's sitting here, building a pressure on the downside. If it breaks, we might get a nice quick move, and these are stop run levels. So this might then drive price to the 117 big number level. It's basically the minimum pullback I'm looking at. So let's have a look now, putting things into perspective, right? So how does that look like on the daily? The 117 level, it's basically here, right? Okay, yeah, clearly. Well, that's the lower range of this sideways activity. It goes here, and I'm even seeing more potential to go lower towards the 115 level. Well, 115 is our breakout level, which is basically here, and this is important support as well. So we might see price minimum going to 117. It could go to 115. And having a look here on the weekly, 115 looks reasonable for price to go, right? So 115 would be a pullback to the 21 moving average. So my preferred pullback is the 115 actually. Let's just put here, let's just put here a small square just to remember. This is the preferred, that's a target area for the next, so we take that out, we have achieved this. This is the target area for the next couple of, I don't know, this week, next week, next 3 weeks. It is still active, this early trend in change upwards, but obviously, well, we need a pullback, right? We had no pullback yet. This is a one leg move. We need a pullback. Once the pullback occurs, then we might actually continue in this overall monthly early uptrend that we have kicked off here as well. We are overextended from the moving averages. So if we come back to 115, that would be pretty nice. And we get a touch of 8, right? So in this case, everything would fall together. So the patterns tell the story on the 5-minute. We can make sense of it, like tell the story on the higher time frames where price might go to. And it would make absolutely sense, right, to go to these levels. 115. We get a touch here of 21 on the weekly. We get a touch of 8 on the monthly, which is basically a very healthy pullback. And if this this early uptrend should be sustainable. Well, we need healthy pullbacks along the way. There's no doubt about that. So I hope that was of interest. And let's quickly talk about this. So how is this tradable? Well, the 5 minute is already tradable, right? So we have our early downtrend. We've got the first zigzags here. So this, if this is TC2 chart, that is in a downtrend. The TC1 chart is in a downtrend too. So this allows us to trade the 5 minute chart, all right? So whenever here an S2 pattern or an S1 pattern comes up, I actually like to be short, because very often counter trend moves can develop into real strong counter trend rallies. And we might actually see, these are stop run levels, right? We might actually see a clean cut stop run level to these, down here to 117. And clean cut momentum moves are always great to make money, right? So I hope that was of interest. Just wanted to share that with you. Thank you.